Good morning, folks. My name is Chris Chandler. I'm president of PFL. We hope that everyone had a great weekend. We hope that you are enjoying our early morning briefing. We are live at 7 a.m. Eastern every Monday. If you are viewing this podcast through our reports and are up at 7 a.m. Eastern on Mondays, please turn in live next week instead, and please like us and follow us on LinkedIn and pass on the good word. We would certainly appreciate it, and you could win a PFL Railcar. At the end of every quarter, we have a draw for those that do like us and follow us on LinkedIn, and this quarter we are giving away a PFL tank car. Our weekly quote this week is from Sam Ewing. Sam is a former baseball player for the Chicago White Sox and the Toronto Blue Jays. I'm originally from Toronto, so I really like Sam. Sam batted left and threw right. Go figure. I bat right and right left-handed. Sam once said, hard work spotlights the character of people. Some turn up their sleeves, some turn up their noses, and some don't turn up at all. It goes without saying, we really like this one, folks. At the end of the day, we think we have good character at PFL, and we roll up our sleeves and work hard for you, the customer. Another 553,000 Americans filed new jobless claims last week, declining 13,000 people week over week. More than 16.5 million Americans are still receiving unemployment benefits across all programs. Stocks fell Friday after a record-setting session a day earlier, with stocks taking a pause after strong earning results and more encouraging economic data helped fuel the latest leg higher. The three major indexes posted strong gains for the month of April. The Dow closed lower on Friday of last week, down 188.51 points and down 168.64 points week over week. The S&P 500 closed lower on Friday of last week, down 30.3 points and up a mere 1 point week over week. Last but not least, the NASDAQ closed lower on Friday of last week, down 119.86 points, down 54.13 points week over week. In overnight trading, Dow futures traded higher and are expected to open up this morning 166 points. Friday of last week was the biggest drop for Brent and WTI contract in over 3 weeks. Prices did have large month-over-month gains. Japan's imports fell 25% in March year over year, dropping to 2.34 million barrels per day according to government figures. WTI crude oil fell $1.43 a barrel to settle at $63.58 a barrel on Friday of last week, up $1.44 a barrel week over week. U.S. commercial crude oil inventories increased by 100,000 barrels week over week. U.S. crude oil inventories are at the 5-year average for this time of year. Total motor gasoline inventories increased by 100,000 barrels last week and are 3% below the 5-year average for this time of year. Distillate fuel inventories decreased by 3.3 million barrels last week, week over week, and are at their 5-year average for this time of year. Propane and propylene inventories increased by 500,000 barrels last week, week over week, and are still 18% below the 5-year average for this time of year. Get ready for propane spikes this winter. And finally, U.S. crude imports averaged 6.6 million barrels per day last week, an increase of 1.2 million barrels per day week over week. Over the past 4 weeks, crude oil imports averaged 6.6 million barrels per day, up 10.7% more than the same 4-week period last year. Oil is higher in overnight trading, and WTI is poised to open at $63.70, up 12 cents per barrel from Friday's close. Total North American rail volumes were up 24.8% year over year in week 16, resulting in quarter-to-date volumes that are up 25% year over year, and year-to-date volumes that are up 8.4% year over year. All of the AAR's 11 major traffic categories posted year over year increases, with the largest increases coming from intermodal up 27.2%, coal was up 28.4%, and motor vehicles and motor parts were up 549.9%. North American rig count was down by 2 rigs week over week. The U.S. was up by 2 rigs week over week and up 32 rigs year over year. The U.S. currently has 440 active rigs. Canada's rig count was down by 4 rigs week over week, but up by 24 rigs year over year, and Canada's overall rig count is 51 active rigs. Year over year, we are up 56 rigs collectively. We are starting to see larger year over year increases in rig count numbers in comparison to last year's dismal numbers as the trend upward continues. A few things that we are keeping an eye on. Dakota Access Pipeline, DAPL. In the latest and greatest on DAPL, the U.S. Army Corps of Engineers was asked by federal judge hearing the case, Judge James Bosenberg, to provide an opinion by the end of today, if they have one, as to whether or not DAPL should be shut down. Looks like the judge is punting it back to the U.S. Army Corps of Engineers to make a decision. The judge in another ruling also asked the U.S. Army Corps of Engineers to give its latest and greatest estimate on finishing a court-mandated environmental review of the pipeline. A decision could be made as early as today. DAPL is an operating 570,000-barrel pipeline that the Standing Rock Sioux tribe, who claims it could threaten its water supply, wants it shut down. According to DAPL and its shippers in North Dakota, it could be devastating, affecting refineries and costing thousands of jobs. Petroleum by rail. The 4-week rolling average of petroleum carloads carried on 6 of the largest North American railroads fell to 23,444 from 23,819, a drop of 375 railcars week over week. CP and CN fight over the KCS. Who is going to win? Well, the KCS Board of Directors has agreed to negotiate with the CN about a possible merger. KCS said the CN proposal could lead to a reasonably superior proposal. CN Chief Executive said CN looks forward to completing its due diligence and finalizing its merger agreement with the KCS promptly. Meanwhile, CP downplayed the KCS board's decision, saying that the KCS is simply meeting its obligations under the merger agreement with CP and fulfilling its fiduciary duty to KCS shareholders. Refiners in the U.S. are shutting down, and we may see more. Get ready for higher gas prices at the pump. Why? Well, folks, their compliance costs under the Renewable Fuel Standards, RFS. If a refiner does not blend biodiesel ethanol, they have to go and buy renewable identification numbers, commonly referred to as RINs, off people that do not blend. Prices have skyrocketed last week, hit all-time highs, and refiners across the United States are feeling more than a pinch. Higher prices for corn and biomass diesel feedstocks last week continued to prop up RIN credit values. Following 3 days of decreases last week, prices rose across soybean futures on Friday of last week. We observed the largest price change in the July 21 contract. In addition, corn markets opened up strong last week, pushing above $7 per bushel before easing some in volatile trading sessions. Soybeans are used to make biodiesel and corn is used to make ethanol. PFL has been involved in the RIN market since its inception and did the first brokered over-the-counter RIN trade, and has tracked daily data as it relates to RIN pricing and the various vintages. See PFL's rail report today for some cool, nice graphs. Last week was a very busy week in the RINs market. Ethanol RINs, D6 RINs on Friday of last week closed out the day in the week at $1.50 a RIN, up 9.25 cents per RIN week over week. Meanwhile, biodiesel RINs D4s closed at $1.55, up 7 cents per RIN week over week. It's not just RINs that some refiners need to contend with. If you have a refinery in California, you're dealing with LCFS credits, but this is a story for another day. As compliant costs increases, it means that more renewables need to be produced and blended, forcing refiners to potentially shut down refineries or build or modify existing refineries to produce more renewable fuels, as Phillips is doing in the Bay Area and PFL in New Jersey. Ultimately, we're going to pay for this at the pumps. The good news for rails is the more renewables are produced, the more rail traffic. Maybe we can soak up some of those cars out there. Please call PFL Analytics if you want any more information on RINs. We'd be happy to share that with you. That's all for this week's podcast, folks. We hope it was helpful, and we hope you have a great, safe week. PFL has been extremely active in railcar storage, return on lease strategy, subleasing, mobile repair, and mobile cleaning. Make sure to check out our just posted reports at pflpetroleum.com. And of course, if you have any questions, want to troubleshoot any matter, we'd be happy to chat with you, and please give us a call at 239-390-2885, and have a fantastic week, folks. And